Hello, guys. So, you're welcome to today's lesson. We'll be talking about understanding the market maker levels in forex trading. Okay, so in the previous video, I already talked about what who the market maker is and all of that. So, I would like for you to go check the previous video just in case, because that's where we laid the foundation of most of the things we'll be talking about today. And also, I would like to advise you to subscribe to the channel so you could follow through, because this is a whole series we'll be working on. Okay, I'm going to be posting a whole different episodes in this whole market maker method kind of trading, which is called the BTMM. Okay, so it will be in your best interest if you really want to learn how to trade forex the proper way to just hit the subscribe button and turn on the notification bell so you don't get to miss out on any other video we post. All right, let's dive straight into the business of the day. Yeah, so who is the market maker? We already talked about that the market maker, they have different methods, different ways they try to shift the market and all that, just because they want to make profit. Okay, so I want you to still have that at the back of your mind. So now, talking about the market maker levels are defined basically as market impulsive moves after a consolidation or price pullback. Okay, now, they are basically manipulative moves that are available for the market makers to book their profits and accumulate new contracts. Okay. And I already said that in the previous video too, that levels basically exist in all time frames. Whether we're dealing with the smaller time frames or the larger time frames, we have levels there. Okay. And then mastering the concept of drawing levels can help you, okay, to predict the market directions with a high degree of success. Okay. Now we have what we call the period separator, and that's what I want to start with today. Okay, the period separator is basically a property, okay, in the MetaTrader 4, MetaTrader 5 platform. Okay, it basically simplifies the way we look at trading in terms of maybe timing and all of that. Okay, so the period separator, for example, what we have here now is um, this period. I'm going to Okay, so yeah, for the period separator, as you can see, now this is my daily chart. These two lines that I'm drawing here is these are the lines, these lines you're seeing here, they are called period separators. Okay, period separator. So it's separating the periods. What do we mean by period? On the daily chart, from here to here represents 1 month of trading. Okay, from year to year also represents another month of trading. From year to year also represents another month of trading, and from year to year, just like that. So on the daily chart is separated into periods, into monthly periods. Okay. Now so we're gonna go straight to the um, on the H4 chart. On the H4 chart, the periods are separated, okay, into weeks. So from year to year is 1 week, from year to year is another week. And on the H1 chart, it's separated into days, okay, into days. So from year to year is 1 day. From year, so each period basically has to do with, they have their own timing that they represent. On the weekly charts, the period, okay, are separated into year. So from year to year is a year of data, a whole year of data. Even the monthly chart, okay, the monthly chart too, from year to year is a whole year of data. Okay, so that's basically that. This is very important because in our learning how to count the market maker levels, okay, we are going to be applying that knowledge. So that is why it's very important that you get to know how to identify that. Okay, so basically on the 1 hour time frame, a level is defined as a day of rise or drop. Okay, on the H4 time frame, a level is defined as a week of rise or drop. Okay, on the D1 time frame, a level is defined as a month of rise or drop. And on the weekly time frame, a level is defined as a year of rise or drop. Okay, so now I'm going to be showing you that. Okay, now when I say level, what exactly am I trying to talk about? Now, there's something I started explaining in the previous video. Okay, that's the market maker. What they do is they try to accumulate contracts. They accumulate contracts, okay, during the Asian session. And the Asian session, remember I said that it has to do with consolidation. So there's a lot of consolidation going on. Okay, now their plan is to go up. Now, even though their plan is to go up, they will make a lot of consolidation. What are they doing? Accumulating contracts, and then they drop the market down. By dropping the market down, what are they doing? They are creating what we call a false move, or better still, we call it a stop hunt. Now they create the stop hunt. They make fake people out to make people believe that they are going to go for a sell, and a lot of people start applying sell, sell, sell. Yeah, yeah. So at that point, what do? They give a pattern, a W pattern, and then they start trading away. So they give you the first level, okay, then they go again, they give you the second level, then they go again, they give you the third level, and at this point they create another pattern and end the day in a consolidation. So that's basically how a typical trading day works, okay, or is. Okay, so we're going to be looking at that in the chart right now, okay, but I just need you to have this at the back of your mind. It's very, very, very important. Excuse me. Okay, so we are currently on the card CHF chart, and so I'm going to try to mark this level so you get to see what we're talking about. Now, this is the D1 time frame. Now, the market created what we call a peak formation high. Okay, I'm going to use an object to represent that. The market created what we call a peak formation high here, a peak formation high. Now, from this peak formation high, okay, so this is like the high of, take a look at it. How long did it take them to form this high? 1 month, 2 months. Okay, so basically approximately 2 months, okay, was used to form this high. Okay, and after that, the market did what? The market maker traded away from that high. So have a look at this. Now, just like what I was trying to say, that um, on the way we define levels, okay, we said levels can be seen on any time frame. Okay, so look at this. Now this is the daily time frame, and you notice something. This is a whole month. Okay, this is a whole month. In fact, it's even entered into another month. Okay, so a whole month of drop, right? Now, what happened? We If we say this is a whole month of drop and it entered into the second month, now the way levels are counted, okay, we cannot say this is the second level. We could have said this was the second level, but somehow it retraced back, okay, and invalidated this particular um, high that was created there. So that means the first level is this. Okay. So I'm going to be marking a lot of charts in subsequent videos. As a result of that, you're going to get used to understanding how these levels are marked. Okay. So that is it. Now, this is the second level so this is the second month of drop. Now, what is this telling me? This is already giving me an idea that the market maker might do what do they, of course, they are consolidating. Maker might do a little bit of this and probably drop for a third level on the daily time frame. Okay, so but then I want to go to the H4 time frame to show you guys all what has basically been happening. So let's do this. Um, Now I want to mark this so you know what we are dealing with. Now this is the daily chart. Okay. So now when I go to the weekly time frame, when I go on the weekly time frame, you're going to see the levels that I just marked. Now remember what I said, that you get to see levels in any time frame you're dealing with. Now on the week, on the 4 hour chart, we said a level can still be defined as a week, okay, of drop. So now look at this week. Let me use another color to identify the H4 time frame. So I'm going to use something like okay, let me use something like this. Now, look at this. Just see, simple stuff, guys. A week of drop, okay? So this is the first level, okay? Then what happened? The market retraced back, okay? And then gave us a second level, right? And then what happened? The market retraced back again and gave us a third level, okay? So what does this tell you? This tells you that if you are able to position yourself very well with a proper understanding of the market maker method, okay, you're able to position yourself very well to trade in the direction of the market makers. And guess what? You're going to book a whole lot of profits. Okay, I don't want to go into, okay, but maybe let me still look at this way. Now, uh, this is the second drop. Now, the second level for the daily time frame. Uh, Let me go back to the daily chart. Sorry, this is the second week month of drop that I talked about. So that's basically the level two of the monthly time frame. So I'm going to show you something now. Now just have a look. This is the H4 time frame. What happens? We had a week of drop. Of course, see the market maker, they know that somehow we can easily just say, okay, so that means every week the market might drop or the market might rise. And as a result, because they do not want us to, they want to take our money from us. So all they do is to try to vary the theme. And that's why you see that even though the proper definition is supposed to be a week or a week of drop or rise or day of drop or rise, they somehow try to enter into another week or another day just so you can get confused and all of that. But just understand the whole concept and you're good to go. So this is our first level on the 4 hour time frame of the second level of the daily time frame. This is our second level, and then this is our third level. Okay, this is our third level. So you see, guys, this is just pure simple stuff. And I can also go down to the H1 time frame and then show you how these H4 time frames too move. Okay, let me show you. Now look at the first level. This is the first level of the H4 time frame. And what happens? Now we can still do what? Sorry, we can still mark our levels here. Like I said, on the daily time frame, it is a day of drop. So look at the first level. I'm going to use a different. I'm going to use a different. So let me use white. I'm going to use a different. Yeah. So this is a day of drop. Now this is the second level. Now this is the third level. Okay. Of the what? Of the 1 hour chart. So you see, they keep building upon each other. Now I can continue doing that for each and every one of the charts we have here. Okay. So, but because I don't want this video to get so long, now I'm going to go back to the 4 hour time frame. Now you see, can you see how the market makeup? So what does this tell you? This tells me simply that the smaller time frames are simply the building blocks, okay, of the larger time frames. Okay, and remember what I said initially, the market maker, they are basically in the business of tricking us, the retail trader, in any way possible. So we must always remember that they vary the theme from time to time. Okay, but for us to validate a particular level impulse, we must observe that the high and low have a significant distance, okay? And then the low must break the previous low of the preceding level, and the high must break the previous high of the preceding level. That's all. So in some instances, the impulse can spill into the next period and a low must be defined. So remember, I already said that. Okay, so this is just basically simple stuff, guys. Just expect other videos dealing on this concept, so to help you um, have a good grasp and understanding of this. So once again, I want to say, if you like this video, if you're sure that you've learned something, kindly hit the subscribe button and um, give the video a thumbs up, and don't forget to share. Don't forget to share this video so we can have as much people also learning the secrets of forex trading. Okay, it's not all about indicators and all of that. There is a way we trade the forex market. Okay, so and I'm doing this. These are courses that I paid a huge amount of money for, but then I'm sharing my knowledge free of charge. So before I post the next video, I would like to see a lot of sharing of these particular videos. So thank you guys for watching, and see you in the next video.